Hello, traders, and welcome to the Friday wrap-up, November 20th, 2015. Currently, it is 23:32 hours on Wall Street. Traders, I'm coming to you from Pattaya, Thailand, where it's actually 11:32 in the morning. Great to be with you. It's a beautiful sunny day today. Can't wait to get out and enjoy my weekend break and go visit some friends and maybe even have a cold one. Never know. All right, traders, we got a bunch of daily charts we're going to go over. I just want to go over a couple of things real quick here. Let's take a look at the indices. The Dow 30, the S&P 500, the NASDAQ, the small cap 2000 all closed in the green yesterday. Let's head over to the Eurozone and see how they did. The DAX, the FTSE, closed positive in the green. The CAC 40 was negative, barely at 0.08%, and the Euro Stoxx 50 was positive. Traders, let's head on over to Asia and take a look at some Asia countries. And the Nikkei 225, the S&P ASX 200 out of Australia, both closed in the green. The China A50 closed negative 0.23%. And the Hang Seng and the Kospi both closed in the green. Just a note on the Hang Seng out of Hong Kong, they closed up 1.13%. Very, very nice. All right, that is what is going on in the indices and how the markets closed after Friday's trading. Okay, so let's get a move on. I got a lot to talk about, and before we do that, before we get to the charts, got a bunch of charts to look at. Remember, the purpose of this video is we're going to take a look at daily charts, and we're going to look at price action, and maybe what we can expect in the week ahead as we're coming into a short week next week, as we have the Thanksgiving holiday on Thursday in the United States, so the U.S. markets will be closed next Thursday. So it's sort of a short week as far as New York goes, but you know, if New York's not trading, the market's pretty lackluster to say the least. All right, let me introduce myself to you. My name is William Gilday, and I am your moderator for the Friday Wrap-Up. And remember, every weekday we do the market opening preview before the London Open. We get this YouTube up and we go over 6 currency pairs in that video with commentary and analysis. Traders, I started trading in the year of 2006. 2008, I retired from a wonderful 27 years as a firefighter paramedic out of the great state of Florida. 9 days later, came to Thailand for a 3-month holiday to celebrate my great career in retirement. And well, traders, it's 8 years later, and I'm still in Thailand, and I'm still enjoying life. My first career was an adrenaline rush, and my second career is pretty much an adrenaline rush also. So it is really great to be in Asia and having a great time. Traders, remember, I'm always looking for opportunities and probabilities to get a win on my win-loss column. And yes, I do lose trades. I lost a trade last Thursday. I lost an Aussie dollar trade. You know, losses happen. It's just the way the market is, and you got to put that in there. But with good money management, and you know, if you have a good money management system, you're going to be fine. Because a losing trade, you should just be able to wipe off your shoulder like wiping dust off the table, right? So, well, I'm a technician. I love reading charts and analyzing charts, and that's what I do the best. I look at price structure, price action, support, resistance, candlestick patterns. Candlesticks tell us stories. You need to know candlestick patterns. It tells a story. And then, of course, I listen to fundamentals. I don't trade fundamentals, meaning I don't trade the numbers, but I normally will take a trade if it's within the trend and it looks good about 40 minutes after the numbers come out. That's just a little bit about myself. Let's head over to the legal stuff. This is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head to the charts. Now remember, we're just looking at price action here. We're not set up trade alerts or anything like that. We're just looking at price action. This is dollar Swiss, right? Well, this is not unusual. We were expecting this. The dollar has been very strong for a long time. This is probably close to 3 weeks worth of candles here, and the dollar has been strong. But one thing I want you to take a look at is how the 200 exponential moving average, and that's the green line on the chart, has been respected. Every time it comes to that 200 EMA, the dollar Swiss reacts very strongly to it. And you can see that price now is really far away from that. So last week we had basically the dollar, you know, it just went sideways. The Swiss had a pretty positive day one day, and I'm pretty sure that was because of a data release, if I'm not mistaken. And so, if you're trading this, I would only be looking to buy this pair of dollar Swiss. So when you go down to your hourly time frames, your 4-hour, your 15-minute charts, your bias here would be to buy this, right? Okay, let's take a look at the pound dollar. The pound dollar is weak. Pound took a pretty big beating 2 weeks ago, and started to come back a little bit, but had a bad day on Friday, and actually had a bad week. Look at all those indecision candles. Remember, each candle is one 24-hour period, and if you go back to like 4 days, you can see those. Doji, indecision, doji, another indecision, Thursday, indecision, and then yesterday just dumped. And that was because of dollar strength, right? It's not necessarily that there was a problem with the pound. That was a dollar strength move. Okay. All right, let's take a look at a currency pair that most people trade, and that's the euro dollar. And, this is not a surprise that we're seeing this. We've seen this for weeks now. The euro dollar is bearish. All you want to do is be selling the euro dollar. I wish I would have sold the euro dollar about a year ago, put a couple of lots on, and basically took off for vacation. I would have come back from vacation and had a great account. But yeah, this is just really bearish, and all you're looking to do is sell the euro dollar. I really don't have any intentions on buying the euro dollar. If I got to wait for it to move 60 or 70 pips to get to my resistance area, right? We sell at resistance, we buy at support, and we just take this baby down, and that's the way to work this. There's no reason to be buying the euro dollar, folks. And don't say that's a bottom. We never say there's a bottom or that's a top. That's support, but that's not a bottom. We don't know how low this can go. Who would have ever guessed that we'd be at 1.06, right? Who would have ever thought that 6 months ago, right? When we were up at, at 15, 1.15, right? So, never say we hit a bottom, because we sure have been proven, especially with the euro dollar, that it can keep going down. And if you read what's going on out there, there's a lot of talk that it's going to keep going down. So, they're expecting this to hit parity and all that stuff. So, the bias, you want to be selling the euro dollar for next week. All right, let's take a look at the dollar yen. Dollar yen, this is all a dollar move. We know the yen is strong, and that's why you can see that we have 2 weeks of sideways price action. You know that Finance Minister Kuroda has been talking a lot. Prime Minister Abe has been talking a lot, about their financial situation, what their plans are. But, they use like the same terminology that Draghi used, the ECB president, that, we have many tools in our toolbox and we're prepared to use them if we need them. At this moment, though, I think it was Thursday, they had a policy meeting, and basically they said, we're just maintaining. We're just going to do what we're doing, and we're not going to change anything. Well, when Kuroda starts speaking like every day, you have to really keep an eye on that, because that means they're going to do something. If you ever notice, if you look at your economic calendar, anytime that the Japanese are going to, the yen is going to put out a meeting or a interest rate or anything like that, they never give you a time. It's always tentative. They never tell you when they're going to do it or what they're going to do, right? So you got to be aware of that. However, if you do not have a dollar index chart, I do not have a dollar index chart on this platform. So if you don't have a dollar index chart, which you really need to have, I mean, you can go to plenty of websites and have one, get one for free. Even if you go to the dollar futures, I don't care what you do, you need to know what the strength and weakness of the dollar is, especially, like I'm an intraday trader, right? I most of the time I don't keep my trades open overnight. So here, you would see that this is sideways, and that the dollar is strong, and the dollar is not giving up that strength, and it looks like they're going to raise rates in December, and the dollar is just going to get stronger, and we're gonna watch that as time goes on, right? But this is pretty funny, because really the yen is strong and the dollar is strong. That's another reason why this is, got two strong pairs fighting against each other. So this is pretty interesting to watch. All right, let's take a look at the dollar CAD. Really concerned about the dollar CAD, and remember the CAD is a commodity pair, right? It's a commodity pair, and it's been sideways, and that's because oil has hit Canada really bad. Oil is a big part of their economy, and when you take oil and you divide it in half, and now half their economy gets hit. And I was reading last week where they were showing pictures of the ports where they export oil out of on these tankers, and these tankers are like lined up and they're just docked. They're just sitting there. They're like side by side, 4 deep, and they're just sitting there. They're not moving. So they've really been hit pretty hard by this oil crisis. So this is a very interesting pair to watch. However, this is sideways, and I wouldn't trade the dollar CAD myself. I wouldn't mind trading the CAD, but I wouldn't trade it against the dollar, right? This is sideways price action. There's no trending here. It's at resistance in my book, and if anything, I'd be looking to sell it, right? But it's at resistance, and I respect that. So I watch the dollar CAD, but I don't think I would be trading the dollar CAD myself. All right, let's take a look at the Aussie dollar. It's bearish, folks. The Aussie dollar is bearish. It has its good days. Remember, this is a commodity pair, and it's a very, very tight commodity pair, okay? And what I mean by that is that it reacts to data from wherever it comes from, whether it comes from the States, whether it comes from New Zealand, wherever the data comes from, Japan, China, anywhere, the Aussie reacts to it. And you have to be aware of that. The Aussie also does a lot of import-exporting with China. So anytime you see China data being released, you should really go to an Aussie pair and trade it. Not necessarily the Aussie dollar, but an Aussie pair, right? Because it does affect that currency pair. Remember, we're macro traders. We trade the globe, so we have to pay really close attention to that. As far as the Aussie dollar goes, you can see on this chart it's still bearish. It's come up to resistance. Actually, didn't even get all the way up there. It's already come back down. Now it's going back up. It's just all over the place. But on the whole, if you expand this chart out, this is a bearish chart. If you look at the 200 exponential moving averages, straight down. So just keep that in mind that this is definitely bearish when you go to trade this. Okay. All right, let's take a look at the euro pound. Really unbelievable. We know the euro is weak. The pound is strong. Really, the pound has done very well this week. If you look at intraday, the pound has done well. They've had some good numbers come out this week, and really the last 2 weeks. So, if you're going to look, what are you going to trade? You definitely want to sell the euro and buy the pound, right? So, that... you want to sell the euro and buy the pound, okay? And we're at support. You can see for the last 4 days we've been at support. We've basically been in this little 4-day range here, and we'll just see how this comes into Monday. We're coming into this holiday season, folks. We've only got about 3 weeks of trading left, and that's going to be it. Once you get to December 16, 17, somewhere in there, maybe even 14, pretty much volume is going to really sink until after the new year. So, just keep an eye on it. Doesn't mean we're going to stop trading, but we have to be aware of the facts, and that's the facts out. Once, the first hint's going to be next week, we're going to get a short week. Basically, Thursday, New York markets are closed. Friday, New York traders are not going to be trading. Most people in the United States take off on that Friday. They call it Black Friday, but it's when everybody goes shopping for the holidays. And pretty much trading is going to be a 3-day week next week. So, volume is just going to be very, very low. So just keep that in the back of your mind. All right, let's take a look at the Euro Aussie. What a great pair to trade. I really kicked myself I didn't get into this. I was sitting in Asia, and I had my charts up, my trading charts, my live charts, and I saw this move starting to develop. And on a hourly chart, and then I went to a 240 chart, a 4-hour chart, and I saw this red candle develop yesterday. And I didn't get into this trade, and my reasoning was because it was Friday. There was, I just really didn't want to bog myself down on a Friday. I love trading Fridays, but I knew I wouldn't be trading Friday in New York because I had a dinner engagement, and I wasn't going to be in front of my charts. And I didn't, take an advantage here. And, one thing about trading, when you get an opportunity, you got to throw that dart and get in there. I should have put a limit order in there. I should have, put a stop and at a take profit area and put that trade on, I would have did very well. This pair moved very nicely. But the bottom line is that the Euro Aussie is bearish, folks. It's bearish. It does get its days where you get 3 or 4 days to the upside on our lower time frames, but on the whole, I just want to sell the Euro Aussie. Right? I just want to sell the Euro Aussie. The Aussie is a heck of a lot stronger than the Euro. It has been for a long time. This is nothing new here. Okay, and this is one of my regular pairs that I trade on a regular basis. And so is the next chart that's coming up, which is the Euro Yen. This is a really easy chart to read. You can see that the Euro Yen is bearish. All I want to do is sell it. Right? Here's another pair yesterday that I did not catch. But look at this big red candle. Just absolutely dumped yesterday with yen strength and Euro weakness. And this is what a way to end a week. If you were short on this Euro Yen yesterday, you really did very, very well. But looking into next week, if you look at this chart, it just looks like a perfect set of stairs. If you look at all the tops of all these wicks, coming down, just stepping away. And if you took a Fibonacci tool out and fibbed these would all probably be fib numbers or pretty close to it, right? These are just fibbing its way down, lower lows, lower highs, and just keeps moving on down, just chomping away at it, just, chipping away a little bit at a time. So going into next week, I'm looking to sell this. Let's take a look at the beast, the pound yen. Pound yen is all over the place. However, it tried to take out some highs, and it couldn't do it. And Thursday and Friday, you can see we have 2 bearish candles there. And I'm bearish on the pound yen. I've been for a long time. Like I said, it does have its good days. There's no doubt about it. And trust me, traders, if you don't have at least 6 to 8 months of live trading, do not trade this pair. This pair will beat you up in a heartbeat. Okay? This pair is very volatile. It moves quickly. It's very abrasive. It does move some good pips, though. It moves 100 pips a day. So you have to be pretty on it to be trading this pair. This is not a pair where you go walk the dog, right? Until you get break even, you got to be sitting in front of that monitor and watching what's going on and listening to fundamentals, because anything comes out, this can swing this pair. It's a very volatile pair, and please have at least 6 to 8 months of live trading under your belt before you get into this pair. Let's take a look at the Aussie CAD. I put this in here. It's not a pair that I trade, but this is a perfect example of not trading the CAD, right? Look at this Aussie. We know the Aussie is strong, right? Well, the Aussie is strong. It's just not strong against the dollar. But if you take the Aussie against the CAD, and it's pretty funny because these are 2 commodity pairs. These are probably one of your 2 strongest commodity pairs, right? The Aussie and the CAD. And the other one is the Kiwi, right? And just take a look at this on Thursday and Friday, this up move here. And that was CAD weakness. Now, why do you think that happened, folks? Absolutely. Oil broke below $40 a barrel. It actually went down to 39.96 and then popped back up and ended up closing that day at 40.06 per barrel. So yeah, it's all about oil. Okay, that's why the CAD was weak here and the Aussie just took over. All right. So this to me, in my opinion, was an oil trade. However, if you look at this chart, spatially, this is a bearish chart, right? We want to just sell this. If I was doing anything, I'd want to be selling this. Okay, so I'd be selling the Aussie. But it's broken some levels here, and it's going to be interesting to see. And it definitely respects that 200 exponential moving average. Okay, here's the Aussie Yen. Not a lot of price action here. In fact, this is one of my pairs that I trade, and just absolutely sideways. A little bit, bumped up a little bit each day here, but very lackluster pair this week. Not a lot to talk about. It's in a sideways price action. We just need to make this thing make a decision. I'd probably wait for this to get up to the 200 exponential moving average at 90.45, 90.50, and see what happens at the 200, and then start trading from there. I don't think I want to take this ride up. I'll wait till it gets to the 200 and then take it back down again. So my bias is to sell it. I want to sell this. And if you're trading a daily chart, you definitely want to wait till this gets to the 200 and see what's going to happen. And the last chart of the day, my friends, is the New Zealand dollar, which is one of my favorite pairs to trade. Of course, I'm always looking to sell the New Zealand dollar. I'm not looking to buy it. If you look at this chart, if you open this chart wide open, you can see that this chart is absolutely bearish. Bearish, bearish, bearish. Okay, it does have its days where it gets bullish, but on the whole, it's bearish. So we want to sell the New Zealand dollar. Alrighty. Why? Because the dollar is a heck of a lot stronger than the Kiwi. All right, traders. Right on time, coming up to that 20-minute level on our video here. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading. Traders, have a great weekend and enjoy your weekend break with friends, loved ones, family, friends, even the guy driving the pickup truck coming down the road, waving and saying hello. Thanks for being with us on another Friday wrap-up. And again, we'll see you next Friday. And don't forget, we do the market opening preview every single trading day before the London Open. Traders, please come visit our website at fxclearing.com for your trading solutions. Okay, that's enough advertising from me. And traders, have a great weekend. I'm out of here, and we'll catch you next time. Bye-bye now.